Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Matthew. This show gets you answers to all of your stock-related questions, and there are several ways in which you can get in touch with us. Among them, there are two on the screen in front of you. And in fact, you've got the WhatsApp number on the top of the screen and the landline number where you can call us on the bottom of the screen. Now, there's quite a bit that has happened overnight, not least of which is Trump's tariff tantrum. The fact that he's levied a 25% tariff, or at least announced a 25% tariff on India. And there are several statements that he has made in the interim as well. Not too long back, he put a statement out on Truth Social talking about how India and Russia can take their dead economies and, well, effectively get lost. But there's a lot on the earnings front as well that we should be focusing on this morning. And there are a couple of stocks that are in focus, not least of which is HUL. We'll come to that in just a bit. But before we do, let's talk about Sagility. And what a set of numbers this company has posted. You have margins that have been under pressure, but it's a positive guidance. And more than anything else, I think the management commentary is what is being sought very closely. So let's bring you that. We've got Ramesh Gopalan, the Group Chief Executive Officer and Managing Director of the company, as well as Doraiswamy Srinivasan. And they're going to be speaking to Puneet. Puneet, take it away.
Let me first start off with, the one key highlight from your results that's very difficult to ignore, and that's the increase in guidance for margins specifically in this particular quarter for FY26. What are you currently seeing on the ground that's leading you to such positive outlook in terms of FY26 at the time where the healthcare-focused industry in the US is seeming to be slightly under pressure? So what's driving this positive momentum?
Thanks, Puneet. Yes, we had a very strong set of numbers in Q1. And that's the momentum that's giving us confidence that FY26 will be a good year for us. A couple of things. On the macro, like you said, there's a lot of things happening in the US healthcare. But a lot of them are tailwinds for us as clients come under more cost pressures and margin pressures. They're looking at partners like us to support them in their transformation journeys. And so since we operate in core operations, which is a non-discretionary spend for our clients, it is that area where clients are looking to improve efficiencies and take costs out. And that's where we partner with our clients to help them in their journey. So that's likely to continue, and that's likely to get a lot more impetus with the profitability pressures, and that's why we are confident.
Just to follow up, sir, because you mentioned that a lot of cost takeout deals has been happening in this industry, and it's quite similar to the commentary we're getting from other IT players as well, that the transformative deals are currently on hold, seeing a lot of cost takeout deals, but for them, the margins are quite lower in that. How does that compare for you specifically in terms of raising the EBITDA guidance in this year, despite going to a cost takeout deal model, at least for now?
Look, our business model, again, going back, we run the core operations for our clients, right? So when clients come to us, they obviously want us to run those operations at a lower cost. And they give us the latitude to transform their operations. So we use technology, we use automation, analytics, AI. We deploy them in the operations that we run for our clients. So unlike an IT services company, which actually does the project, we actually deploy those technologies in the operations work that we do for our clients to help them take out cost. And in the process, the client gains, and we also stand to gain in terms of keeping a bit of those efficiencies for ourselves.
And so, we also saw a couple of acquisitions, especially BroadPath in the last year as well. You had mentioned that this could be some kind of margin dilutive, but given this context of increasing the guidance, how does that shape up for this year?
That's still true. The EBITDA margins of BroadPath is lower than Sagility margins. And while we are working on synergy benefits, which will improve their EBITDA margins over a period of time, the dilutive nature of the BroadPath business is still true. If you realize our EBITDA numbers last year were even higher, right? So we had already guided to some dilution in the EBITDA margins because of BroadPath acquisition. But the guidance that we gave last time to what we are saying now is the EBITDA margins could be a tad better than what we had guided in the past.
And it could be in the range of 120 to 150 basis point as was indicated?
Yes, more likely in the 120 basis point range. Yeah.
And so in terms of deal wins as well, that's also been again a very strong one in this particular quarter. Is there any kind of differentiation that you're seeing from, because you had 18 deal wins from existing ones, but also 4 new deal wins from new customers. Is the trajectory similar to, as you mentioned, on cost takeouts as well as efficiency in their existing systems for US right now?
Yes, a lot of focus is on efficiency and cost takeout. But going back to your question, the 18 deal wins from existing clients, that's been the nature of our business. Most of our growth comes from existing clients. And once we build a relationship with a client, we tend to expand that relationship. And so that's played out well for us in the past, and that continues to play out well. But the specific nature of deals that you're talking about, yes, it's outsourcing by the very nature is for clients to get a lower cost. But in the current scenario, that pressure on further reducing the cost is just amplified.
And it's very interesting because while building into your existing clients as well as deepening your experience with them, the new client additions will of course help you in the medium term as well for increasing the aspects. So point well taken. Just one question, and that's been the talk of the town, which has been artificial intelligence, and how is that helping your current business? With your business momentum of reducing cost as well as improving processes for your clients, has that already been incorporated in your existing deals, or are you being able to charge a slight more premium for the services offered with AI as well as integration of that in your current systems?
Yeah, so it's a little counterintuitive, right? So to your first question, the adoption of AI is gradual, right? So I won't say it's been deployed across the board. Like we've highlighted in the earnings call, we have deployed a number of use cases in our existing clients, and we continue to increase that penetration. To your specific question on how this works out, I'll take you back to the cost takeout, right? If I'm doing a certain piece of work for a client at let's say $X, the client wants me to deploy technology and bring down that X to X minus 10% or 20%, right? And so the question is not getting an incremental revenue because of transformation. It's actually reducing the cost of operations for the client. The way that we are able to retain our margins and grow our margins is we can possibly increase more efficiencies than the efficiencies that we give clients through price reductions. And so part of the effort that we get back basis the efficiencies that we generate also helps us retain our margin. So overall, while the revenue might be cannibalized when you do transformation because you're taking cost out, which means your revenue reduces, it could help you stabilize and improve your margins.
All right, so that's the management of Sagility talking about the road ahead looking much brighter than anticipated, and so that's reflected in the stock price as well. But let's talk about HUL, arguably the stock of the day this morning in the context of the Indian equity market seeing selling pressure. And this is a measured response, if you can call it anything, this morning to the tariff announcement. But really, HUL up about 3.9%, the top gainer on the Nifty 50, and single-handedly pulling the rest of the consumption pack forward as well. The initial print or the bird's eye view of the earnings that were posted not too long back is that the top line was in line and the bottom line was better than anticipated. But who better to give you a sense of what the numbers look under the hood than Mahima Vashrajani, who's gone to attend the HUL conference, which will start very soon. But Mahima, on the sidelines, tell us what you're picking up from the numbers and what specifically you're going to be speaking to the management about.
Right, so Alex, as you rightly mentioned, it's the single stock that's single-handedly pulling the Nifty up, and this is because the investors have shown enthusiasm in the kind of results that it has posted. Good set of numbers, PAT did beat in fact estimates, revenue did meet estimates, margins largely in what the street was expecting, EBITDA almost flat as we speak. Now in terms of, what has worked this quarter, volume growth has bounced back. There's volume growth recovery that's been seen, up 4% on a year-on-year basis, plus the underlying sales growth also at 5% is something that the street is enthused with. Now, in terms of EPS growth as well, double-digit EPS growth is driven by top line, and mid to long-term outlook also remains of a double-digit EPS growth. In terms of the segmental performance, good set of numbers there as well. Home care saw good underlying growth of 4% odd. Beauty and well-being, good growth of 7% odd. Personal care, 6% odd again here. Food, which was a negative growth last quarter, has seen a good growth of 5% this quarter. So all in all, a good set of numbers for sure for HUL, and that's why we're seeing the uptick in stock. In terms of the outlook, price growth to remain in low single-digit range is what the management has said in their press release, and EBITDA margins to remain in the range of 22 to 23 odd percent. So guidance is largely maintained in terms of where the EBITDA margin stands. Lastly, in terms of update on ice cream demerger, the demerger is set to be completed by Q4 FY26, as in when they get the regulatory approvals, is what the timeline suggests right now.
Okay. Mahima, I know that you're standing at the headquarters. I wonder where the building is because I can't see it behind you. If you can pan the camera and show me the building. And also what I'd like to know from you is what are you going to be focusing on asking the management? Because there's going to be a change of guard as well. If I'm correct, and this is pretty much the last conference that the Chief Executive Officer will address.
Right, absolutely. So, Alex, I think the key questions to ask here would be that there are certain FMCG companies that have gone out and said that they are seeing green shoots in the urban recovery, demand recovery. Is that something that the HUL management has also seen? Because HUL being the bellwether in the FMCG staple space, so that's one question that I would want to know about. The second aspect, where there's volume recovery in single digits right now, could that be up in the next few odd quarters with a lot of perks coming in, for example, tax cuts, rate cuts, etc.? So that's the other aspect that I would want to know. And the third part being the competition that's coming in from the unorganized space, especially, in the beauty and well-being section, because that's the segment that they're going big on. So that's something that I would want to definitely know from them.
Got it. And we will cut in just a short while, Mahima, to find out what the management has to say to all of that. Thanks so much for joining us as always. Missing you in the studio though. Let's go to our experts today. We've got Kush Bora, founder of kushbora.com, and Avinash Gorakhshankar, Director Research at Profit Mart Securities. Gentlemen, thanks so much for taking the time as always. And apologies, we're coming to you quite late. Avinash, very quickly on HUL, what did you make? Okay, so Kush, first I'll come to you on the charts. A pretty measured response in light of what we've heard on the tariff front, but specifically on HUL, it's had a pretty bumper response to the Q1 numbers.
Indeed, Alex, but I think now what happens is that, the stock actually now sits at this resistance mark of 25.50. There seems like there is enough and more momentum for the stock and the volume action also to push it past this resistance mark, and we need that to happen. HUL in particular and FMCG as a sector in general have actually not performed as much. If HUL does make that leap, at least in terms of the price action, then you will see some of the other players like Britannia also participate. So while I'm not gung-ho about the kind of price moves that we are seeing today, because we've seen these rallies fizzle out a couple of times, but it is very interesting, juncture that it is at 25.50. If that is taken out, then yes, this new wave of up move could start in HUL and perhaps in the rest of the FMCG pack as well.
Avinash is with us as well. Avinash, very good morning to you. What do you make of the HUL numbers, and would you buy right now? The stock is up 4%.
Yeah, good morning, Alex. Sorry for the interruption. There was some internet issue, so my apologies. I think clearly, Alex, numbers have been better than what the street expected. And I think, with a good monsoon, I think hopefully the volume growth would kick in. And I think the markets are now looking at more of domestic themes. After Donald Trump's announcement of the tariffs, I think markets are going to be more, positive and structural on domestic themes. Specifically, if you look at the FMCG market, Hindustan Lever is one of those companies which has got a very large product basket, a very strong geographical reach. And hopefully, if the monsoon is good, rural demand picks up, then I think you could see margins also improving. And most importantly, the volume growth kicking in. So I think the September quarter and the second half of this financial year is going to be equally important. And if that sustainability is there in the numbers, then I think you could definitely see a further re-rating for the stock. This is definitely an institutional favorite, but I think if tailwinds indicate, I think the second half should be much better. So I think we continue to be structurally positive here.
Okay, continue to be structurally positive on HUL. And viewers, Please bear with us. We're going to start the query segment right now. We had breaking news to deal with, and a lot has happened this morning. But the first question today is Shailaja from Hyderabad asking about Reliance Power, border levels of 65 rupees. Gentlemen, let's run through some of these questions very quickly to make up some time. Kush, on the charts, is this a good point to buy, or would you wait for a dip to add more? She's got 250 shares.
Alex, I would wait. We've seen a lot of action around the around the counter for some time now. The dip started some time ago. While this downtick is on fairly low volumes, there hasn't been much to say that a turnaround is imminent. A couple of immediate support levels. The first one is at 50.5, and if that is broken out, then 46. If those are held, then yes, you could see the counter go sideways. But I wouldn't really advise an accumulation or a buy on Reliance Power just yet.
Okay, so it's an avoid as things stand right now, but it's a hold, right?
More of a hold, Alex, rather than an avoid. I wouldn't put in fresh money, but if you have, you could hold with the levels that I just mentioned.
Got it. All right. Dheeraj from Hyderabad is calling us about Macrotech Developers, which is now called Lodha. Dheeraj, very good morning. How can we help you today?
Sir, I'm holding 145 shares of Lodha at 1285, sir.
Okay.
Sir, should I stay invested in this counter for the next 1 to 2 months, or already I have Sam's shares, sir? So should I add more shares to it?
Okay, but
should I sell both of them and shift to something like JSW?
Dheeraj, you watched the show before, haven't you?
Sir?
Have you watched the show before?
Yes, sir.
Yeah, then you know that we're going to take only one of your questions. Lodha is the question that we will take today. Maybe tomorrow we'll take the other one. 1285 is the buy price for Lodha. 1 to 2 months is the time frame. Kush, what's the view on the charts? Real estate has been chop and churn recently.
Alex, I would continue to hold Lodha. The reason being that the entire pack has seen a very sharp downtick, and Lodha now where it sits is at oversold territories and close to the 200 DMA support. So a rebound is imminent. While his buy price is 1285, major resistances come in much higher, 1330, 1350 zones. So a rebound itself could take the stock to his buy price and even slightly higher. I would keep a stop loss near the 1170 mark and continue to hold. And a quick word on CAMS, you could continue to hold that as well with a stop loss around the 3580 mark if that's a positional trade.
This is cheating, yaar. Kush, this is cheating. I have a rule in place. All right.
It say it's
Kanti Bhai has got the next question asking about, all short-term views being sought. Sham Metallics is the name of the counter. 1 month views being sought by Kanti Bhai. What's the view on the charts, Kush?
Alex, I'm not sure if Kanti Bhai has been listening to us on the morning show, especially on Mondays. The reason being Sham Metallics is actually my weekly pick that I share on Monday morning, the India Market Open show. If you see the moves on this one, they've been very encouraging. It's only down because of the market moves that we've seen. But despite that, if you see the moves that it made yesterday, the recovery and the sharp recovery that it made yesterday, very encouraging. So long story short, continue to hold Sham Metallics. For me, a positional stop on this one is at 920. I'm looking at targets of 1018 and 1069. If you don't have it, you could still go ahead and accumulate Sham Metallics at the current levels.
Okay. Tarun has got the next question. He's asking about Ujjivan Small Finance Bank, which he's got 1,000 shares off with more or less 1% profit. So it's very close to the current market price. On the fundamentals, Avinash, would you hold or would you exit at this point?
No, I think, Alex, I would prefer to hold because clearly, whatever pain was there in the microfinance segment, I suggest that, if the investor can hold on for the next, say, 6 to 12 months, typically FY26 should be significantly better as compared to FY25. I think maybe post-September, I think you could see a much better traction in terms of the business, in terms of the asset quality, and in terms of the profit traction. So I think we continue to be positive here, but I think keep a time frame of at least 12 to 15 months.
Got it. All right. The next question is coming in from Kiran. Kiran is calling us from Hyderabad. Hi, Kiran. Very good morning to you. How can we help you today?
Hi, Alex. Good morning, and good morning, Kush and Avinash. I have one question on Timken. Last week, sometime back, I bought 100 shares with the price of 3515. The Kush referred the stock, and it was interesting me. I also gone through the couple of things from this company because I already hold Sona, BW, and also some other automotive stocks. So that's the reason I feel like this is interesting company. But currently, I just want to know like whether I need to hold or I need to add some more shares to my portfolio.
And this is a short-term.
Especially this question. Sorry to interrupt you. Especially this question to Kush.
Got it. I understood. And this is a short-term view that you're seeking for the next month and a half to 2 months?
No. I'm a long-term investor.
You're a long-term investor. All right. So you're looking at the charts, and at what point is it a good idea to accumulate this stock? All right. I got the question. Kush, you heard it. He heard it first because you mentioned it. I wonder when that was. But he's bought at levels of 3515. What is a good level to accumulate?
So first up, thank you to Kiran for pointing this specifically to me. This was on 24th of this month, that I put out a call on Timken. In fact, it's after a while that a call on Timken has been put out. The stock's actually seen a very smart recovery from the lows. I still maintain, that the stock is in a mild uptrend. However, the pace of rise has slowed down largely because what the market is doing. So the first point to Kiran is that if you do listen to a call and you execute it, it's a good idea to apply the stop losses as well. But since you're a long-term investor and you want to continue to hold, I would suggest a deepish kind of a positional stop loss for you, which is just under the 200-day moving average for Timken. That comes in at about 32.25. So continue holding on. The recovery is underway. The fall in the stock has also been because of what's happening in the markets and on fairly low volumes. So yes, once these issues die down, the uptrend on Timken could well continue. But nevertheless, keep a stop loss near the 32.25 mark.
32.25 is where you keep your stop loss. Pay very close attention to the stop loss in any trade that you take. All right, the next question that we're taking is also short term. It's a very small company. Kush, it's Indo Farm Equipment. It's trading at 203 rupees. It's 975 crore market capitalization. And the question is coming in from Suresh, who's saying that he's bought at levels of 203, which is pretty much where the stock is currently at. Would you have any advice that you can give him on the chart?
So, to be completely honest, I have not very closely tracked this one, and it's listed fairly recently, just at the start of this calendar year, so fairly limited data. So you might have to excuse me on this, Alex.
I'm just going to take a chance. Any chance you have a view on this one, Avinash?
Yeah, I think it's basically a tractor manufacturing company and a very large kind of track record. So I think the company has now started delivering good numbers. Hopefully, with a good monsoon, tractor market sales are going to definitely grow quite positively. So I would suggest that if the investor who has asked this question has a time frame of at least 6 to 12 months, I think he should stay invested. He should not worry. Typically, the market for this company is largely the domestic markets, so they don't have any issue, coming in from the US-India tariff related kind of, headwinds. So at least for the next 6 to 12 months, if you can hold on, you could definitely get a decent risk reward. So continue to be positive here and please hold.
Got it. Hold is a view on Indo Farm. All right, we have to slip into a very quick break. We'll be back on the other side to take more of your questions, so do stay tuned.
huge. That is a biggie. It's out of it.
गोल्ड ग्लास क्लियर ग्लास, कार हो या नियर, सब कुछ दिखे क्लियर।
हेलो
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो
हेलो,
बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Welcome back. You're watching Ask Profit. Let's jump straight back into it. We're taking all of your questions. And by the way, if you're just tuning in, the way to get in touch with us, either the WhatsApp number at the top of the screen or you can call us on the landline number at the bottom. The first question on this side of the break is from Venkat Ramani, who's writing in from Bengaluru and asking about Natco Pharma. He's got 950 shares and he's holding 120 shares. He's thinking of holding for a period of 15 months. Kush, what's the view on the charts?
It's a very interesting setup. The stock has actually done rather well, and there is a rising trend line support that the stock is still sitting at despite the kind of cracks that it's seen in the last week or so. So on the whole, my view is to continue to hold Natco Pharma. On the downside, you've got supports near the 920 mark that should act as your stop loss. And on the way up, you're looking at levels of about 1015 once that is taken out, 1050 as well. So Natco Pharma is a very clear hold.
Okay, Natco Pharma is a hold. Suresh from Ludhiana has got the next question. He says that he's a long-term investor and he wants to know whether it's a good idea to enter into some defense stock. And he's named BEL. And if not BEL, which would you suggest? Avinash, at this juncture, a lot of these defense counters have seen a little bit of profit taking. And that's understandable considering the kind of run that they had after Operation Sindoor. Would you say that BEL is still a buy or would you wait for dips? Or any other defense counter?
No, I think, Alex, I think he can possibly deploy, say, 25% as of now because, defense companies, despite seeing a little bit of profit booking, valuations are fair to expensive. So I think, his choice of Bharat Electronics seems to be fine. He could also look at companies like Bharat Dynamics or Hindustan Aeronautics, because these are the large players which are going to benefit significantly from the government's Make in India policy. All these companies are sitting on an order book which is going to run for at least next to 2 to 3 years. So I think you need to create a long-term portfolio, but I think deploy 25% now. And on a SIP basis, any decline should be used to accumulate these stocks.
Okay. All right. The next counter is on Tejas, or the next question is on Tejas Networks. And Shahul has got this question. He's got 71 shares, but he's holding with a loss of 23%. And he's wondering what to do. Should he buy more or hold or exit? Kush, what's the view on the charts?
So I'd wait this one out, Alex. The stock has actually done phenomenally well, a couple of years, about, up until a year ago. But then it's just fallen off the cliff. Now there are some stiff support zones near the 525, 550 mark, which are being tested. But if those are broken, I think the long-term trend which the stock was into, might just get broken. Right now, it is actually hitting oversold territories on multiple time frames and could see a rebound. So my suggestion would be a hold. Since it's a positional trade, I would suggest a stop loss around the 550, 525 zone, between that zone, and continue to hold. The stock could witness a rebound from these oversold territories.
Got it. All right. So that's the view on Tejas Network. The next question is from Shrina, who's writing in from Kerala. I have asked her what her buy price is for Jio Financial Services. She says she's got 80 shares and she's wondering whether to keep it or hold for the long term. And I'm also wondering whether she intends to buy more. I have asked her, but she's yet to respond. Avinash, on the fundamentals, what would you say about Jio Financial Services? It's done reasonably well in the recent past.
No, I think, Alex, if the investor has invested in Jio Finance, I think you need to take at least a couple of years in time frame because this is a business which is going to disrupt the entire financial services market. They have the balance sheet strength. They have, a very strong kind of parent in the form of Reliance Industries. And recent reports indicate that, the management also wants to buy around 4 to 5% stake. So basically, they are going to put in a lot of their own money in the company. So my sense is, the tailwinds in the financial services space are very positive, except for some short-term hiccups. There could be some ups and downs, but otherwise, over the next 2 years, a lot of wealth can get created. So the investor needs to keep a long-term view here if he wants to make a, very good risk reward from current odd levels. So continue to hold.
Continue to hold, but would you buy at this current juncture or would you wait for dips?
No, I think one can buy, say, 25% as of now. See, because clearly with now the market talking about the management putting in a big amount in the company to raise their equity stake, clearly the stock is unlikely to go down in the near term. So I think at the current level, maybe 25-30% can be deployed. And I think use an SIP approach because over the next 2 years only value could get fructified.
All right. So take a long-term view is a point. Venkat is calling us from Bengaluru. Venkat, very good morning to you. How can we help you today?
Good morning, Alex. Good morning to the panel. So I have query on Orient Technologies. So this is data center stocks are now falling, and this stock is creating something like 14% downfall in my portfolio. So my query is whether I can hold or sell now, or it is having some potential, I can add some more.
Okay.
And I'm looking for 1 year overview.
Okay, got it. Kush, on the charts then, he's bought at 363 and he's wondering whether to hold or add more or sell. What's the view?
So, Alex, the structure doesn't look great in particular. But what's happened is that, the stock is now seeing a positive RSI divergence on the daily chart, suggesting that, a rebound could be around the corner. So I would suggest a tight stop loss at the 306 mark. That's a support zone for the stock. And on the rebound, you'd be better off exiting at 330 and about 350 kind of level. So he may not see, profits in his position, considering his buy price is significantly higher. But if any kind of rebound does come about, then he could exit at a lesser loss. But yes, the 306 stop loss, keep it a strict one. And if it breaks that level, then you're looking at much lower levels below 300 as well. So yeah, with a tight stop loss, continue to hold and exit at any kind of rebounds that you get.
Okay. All right. And then the next question is from Arun, who's writing in from Tamil Nadu. Bought IndusInd Bank at a price of 1,044 in October, and so therefore saw quite a bit of a drop. And then later even bought at 898. At this juncture, we've just seen the earnings come through and it wasn't a pretty picture. Avinash, the question is, how low can it go from this point? Can it get worse, or is it in the price? And would you hold?
No, I think, Alex, the investor has purchased this share at a slightly higher level. And I think rather than booking a capital loss, I can only tell him that, you need to now stay invested for the next at least 12 to 18 months. The Q1 number has not been encouraging. A lot of profits have come from treasury gains, and I think the markets are still not comfortable. Unless 1 or 2 quarters come and where we see strong growth, continuation of good asset quality. I think these are things which are going to take time till at least December. So I think he has to remain invested. Otherwise, he'll have to book a big capital loss. So my suggestion is continue to hold, but keep monitoring quarter on quarter kind of performances. And as of now, I don't think the stock is going to go down below these levels. I think the worst seems to have been discounted, but upside will remain, dependent on the next quarter and at least 2 to 3 quarter performance going forward.
Indeed, who comes in to take charge of the bank? There's a bit of a vacuum in place in the corner office currently. There's no chief executive officer. All right, let's take the next caller. We've got Snigdha calling us from Hyderabad. Snigdha, hi, welcome back to the show. And how can we help you today?
Hi, so my query is regarding Tricon. So I have 230 shares at 438 rupees.
Okay.
So I purchased them yesterday. So should I keep invested, or so as there were results today? Or should I shift to any other stock?
What is the time frame that you have in mind, Snigdha?
So 1 to 2 months.
Okay, all right. So Kush, on the chart, she's recently bought. 430 is a buy price. It's currently at 433. How is it? No, it cannot be lost, right? The share price is 433. We'll have to get that checked. She's bought at 430 levels. What would you do with this? Would you hold for a month or more?
I think you said her buy price was 438, if I'm not mistaken, or 430, Alex.
Okay, I can read 430 on the screen. So
okay, sure. I'm actually quite intrigued as to why did she buy this stock, because while it's done phenomenally well in the last 3 to 4 years, the recent trend has been actually consolidative, sideways at best. Maybe she's playing for a rebound. So in that case, 424, that's a very strong support zone for the stock. Multiple times the stock has come to those levels, hit them, and then rebounded. So perhaps she's trying to do a range play. In that case, it's a fantastic idea. But that would mean that you keep your stop losses at the range, at the lower end of the range, which is 424. If that is broken, then this consolidative phase could actually shift lower. So keep 424 as your stop loss. On the way up, your targets are 450, and once that is taken out, 465 as well. So yes, lower end of the range, risk reward ratio seems positive, but a strict stop loss at the 424 mark, and continue to hold pre-call.
Okay, the next question is also coming your way. This is on Kalyan Jewelers, and this is from Dr. Venu Verma from Bhimavaram in Andhra Pradesh. Bought at levels of 60 rupees a share. Would you book profit at this point and exit, or would you hold for a year more? What's the view, Kush?
The buy price is 410, right?
Correct. No,
yeah, okay.
Buy price is 60 rupees.
Okay, fair enough.
No, sorry, no, 410.
That's
410.
the quantity.
Apologies, 410. Yeah, sorry, my bad. I haven't looked at the ticker on the screen. It's obvious that you were looking at the ticker, and so you were wondering what I was saying. Yeah, 410 is the buy price.
Absolutely. No, I would continue to hold. First up, let me congratulate him for buying it at 410, because assuming that he's done that in in this calendar year, it will be actually the very low, the very near bottom price that he's bought it at. So phenomenal pick, and kudos for him to holding on to this stock as well for the kind of move that it's seen. In fact, it's popped up on our radars as well. For a fresh buy initiation, we haven't done it so, but the structure seems fairly positive. I think you should still continue to hold Kalyan Jewelers. If you go by the recent highs of 800, I think there is some more recovery underway, and very much likely I would still keep a stop loss near the 555 mark. And with the kind of momentum that the stock has got, I wouldn't be surprised to see it pass 625, 650 zones as well, in the coming couple of months' time. So Kalyan Jewelers, a very clear hold. Keep a stop loss at 555.
Yeah, all right. Apologies, I hadn't looked at the price, but we eventually got it right. Hopefully that helps you, Doc. All right, the next question is coming in from Shankar Narayan, who's calling us from Bengaluru. Shankar, very good morning to you. How can we help you today?
Very good morning, Mr. Alex. Your evening 4 to 5, never miss that. It's a very beautiful show, especially on TCS retrenchment. You have done an excellent work by that HR also.
Thank you so
really
much.
Really appreciate the good work.
Thank you, sir.
I think you are from Kerala.
I am from Kerala, yes. My family is.
Yeah,
I grew up right here.
I'm from Cochin.
Oh, very nice to know. How can we help you today, though?
Sir, I just wanted to know whether it's the right time to enter the specialty chemicals.
Okay.
I have two stock suggestions, either Indoamines or Acutas, earlier Ami Organics.
Yes.
Renamed as Acutas Chemicals.
Yes.
Whether it's the right time to enter, because one is high PE, other one is low OPM.
Okay. Shankar, you'll have to forgive me because we have to cut across. I'm just hearing that we're starting the HUL press conference. If we have time, we'll try and take the question after. If not, we'll take it tomorrow. Let's cut across and find out what Mr. Rohit Java has to say.
As expected, consumption demand trends for latest 3 months reflected a sequential improvement. However, at a MAT level, the consumption environment remains stable, with rural demand continuing to grow ahead of urban demand. Commodities continue to display divergent trends year on year. However, on a sequential basis, we are beginning to observe signs of softening across key materials. Over the past few years, we have accelerated our portfolio transformation journey by making sharper, more strategic portfolio choices. In light of this, we believe it is both timely and relevant to present our progress from a consolidated results perspective. In this backdrop, let me talk about our consolidated performance for the quarter. With a turnover of rupees 16,323 crores, we delivered an underlying sales growth of 5%, driven by an underlying volume growth of 4%. We stepped up investments across different lines of P&L, resulting in an EBITDA margin of 22.8%. While this is a 130 BPS year-on-year decline, it remains in line with our guidance. This has resulted in delivery of broad-based and competitive growth, leading to consistent increase in turnover-weighted market shares. Our profit after tax before exceptional items declined by 5%. However, profit after tax increased by 6%, primarily due to re-estimation of tax provision with respect to potential disallowance of certain expenses pertaining to prior years. Our performance reflects the disciplined execution of our Aspire strategy. The actions we have undertaken to execute our strategy are translating into consistent volume-led growth. We have systematically reshaped our portfolio to focus on higher growth demand spaces. This is evidenced by a significant circa 500 BPS shift towards future core and market maker segment in the last 2 years. As a result, our growth trajectory has steadily improved. In a moderating consumption atmosphere, we have delivered mid-single digit absolute volume growth in last 5 quarters. Over the last few quarters, we have strengthened our market shares driven by sharp focus on channels of the future and acceleration in performance of our large categories such as laundry, skin cleansing, and hair. Since 2021, we have gained circa 250 BPS of turnover-weighted market shares, reinforcing our leadership and emerging stronger from the inflation and deflation cycles. Moving on to our segment performance, Home Care delivered another quarter of robust volume growth. High single-digit UVG translated to 4% USG as we continue to pass on the benefits of lower commodity prices to our consumers and ensured competitive pricing. Fabric wash delivered mid-single-digit UVG, while household care delivered double-digit UVG. Our liquids portfolio in home care continued to perform well, delivering sustained double-digit growth. Beauty and Wellbeing delivered 7% USG with a low single-digit UVG, driven by competitive double-digit growth in channels of the future. Hair care grew in mid-single digit on a strong base, while skin care and color cosmetics grew in low single digit. With the completion of Minimalist acquisition and acceleration of performance of Oziva, we have now further added an annualized 1,000 crore portfolio in high growth demand spaces. Personal care grew 6% driven by pricing. Skin cleansing delivered mid-single digit growth. Non-hygiene segment continued to accelerate its performance, growing in double digit. Oral care grew in mid-single digit led by close-up. Foods USG was 5% driven by mid-single digit UVG. Our beverage portfolio consisting of tea and coffee delivered double-digit growth. Within that, tea grew in high single digit with positive UVG. Coffee continued to deliver double-digit growth driven by pricing. We continue to strengthen our market leadership in lifestyle nutrition and have seen a sequential improvement in performance in the quarter. Packaged foods delivered mid-single digit volume-led growth, while ice cream business saw a volume-led high single-digit growth for the quarter. Next, let me share an update on ice cream demerger and acquisition of Minimalist. We will convene a meeting of HUL shareholder to consider and approve the ice cream demerger scheme on 12th of August 2025, basis direction from the Honorable National Company Law Tribunal. To recap, a mirror demerger is being proposed here. That is, for every one share held in HUL, shareholders will receive one share in Quality Walls India Limited. This will unlock value for all the shareholders of HUL and give them the flexibility to stay invested in the growth journey of ice cream business. Moving on to Minimalist, we successfully concluded the acquisition of 90.5% stake with a total payout of 2,706 crores. HUL, along with the founders, are now working closely to chart the future course of growth for this brand and the business. Moving to our near-term outlook, our growth guidance remains unchanged. We expect first half of this financial year to be better than second half of last financial year. If commodity prices stay within the current range, we anticipate low single-digit price growth. We are committed to invest across P&L driven by sequential improvement in gross margin. Consequently, we expect EBITDA to be in the range of 22 to 23%. Looking ahead, we remain firmly committed to driving competitive volume-led growth while creating long-term value for our shareholders. With this, we complete our prepared remarks. We'll take questions.
Good afternoon, gentlemen. I just wanted to, numbers have been in line with expectations. Can you quickly run us through, are we seeing a gradual recovery in urban consumption also? If you could give us an update on that and the rural momentum also, what that's been like. And the second question I wanted to sort of understand, recent announcements. What has caused the change in leadership now? Has this sort of been a sudden decision or has it been a gradual one? If you could just quickly update us on that. And also, Mr. Tiwari, does this mean that you are also going to be leaving soon?
Yeah. So let me pick up the urban, rural and consumption possibly then get.
And I'll take the other two questions.
Yeah. So overall, we had mentioned that the macro atmosphere for consumption is looking more positive. The amount of liquidity increase in the country, number one. The lower inflation, which has been really hurting for the last few years, that is now much better, including food inflation. We have seen positive news in terms of taxation relief in the country. And if I add all those things put together and then take the factor of monsoon, which has been pretty good last year, and also encouraging monsoon in the current year. If I add all those factors put together, overall macro atmosphere looks encouraging. Equally, as I mentioned, internally in the company, we have strengthened our core portfolio and further improved our future core market maker. So overall consumption climate, the sequential improvement that we have seen, we expect it to be sustained, the gradual recovery that we've seen. And even for our business, very similar conversation. The growth has been for FMCG industry led by rural, where rural growth has been ahead of urban. Again, the same conversation, when inflation reduces and agriculture comes better, it helps a large portion of the rural income. So FMCG growth overall, hence I mentioned in summary, has improved sequentially, and we expect this sequential improvement to be sustained. And for leadership changes?
Look, let's first address the question on my movement. I've spent 37 years with Unilever, a large part of that with HUL and also with Unilever. So personally, I've come to a stage in my career, and you would agree that 37 years is a long time, that I want to now do something else in the second stage of my career and life, different from what I've done the last 37 years. So it's been on my mind for some time. And we came to a decision collectively with the company that this would be about the right time. Why? Because while the last 2 years have been pretty tough from a macro and a consumption context, I feel quite fulfilled and validated that we have grown in these last 2 years competitively, despite the consumption strains. We have grown it by volume. Not just that, we've also shifted the portfolio. We made the right changes on our portfolio, made it more future fit. And importantly, I'm very happy that we've set this SPIRE strategy, which is really simple but quite valid for us, which is just about moving our portfolio to faster growth spaces and channels. And the strategy has been socialized, it's delivering. In fact, in this quarter results, it's in exactly the same shape as we would have expected it. And we are very committed as a company to continuously stay on that path of investing for the future, and because we know that it's generating results. So I feel it's about the right time. We have a very good, ready successor. Priya is another homegrown talent like me. She has spent more than a quarter century in the company. She's been on the management committee for 7 years, on the Unilever executive for 4 years. She's headed big global businesses, B&W or Beauty and Wellbeing. You know that 2 years ago I split the division and made B&W a specific division because that's really a driver of value growth. So she's also therefore absolutely well casted to drive that forward. And our talent bench is seamless, whether it be a functions or in the general management. We always are grooming people, and she was ready and I was ready, and therefore we've taken the decision. So it's a well considered, deliberated, thoughtful decision. Both of us are lifers in a sense of this company, and I'm cheering for her and the company, and I'm feeling pretty good about charting my next path, and also feeling good that Priya's in charge.
Right. And Mr. Tiwari, we've also heard that you're probably also going to be moving on to a global role going forward also. If you could tell us, is that happening? What is the plan there?
Yeah, as you see, I continue to be CFO of Hindustan Unilever, and even when there's any announcement to be done, we will inform. For now, I'm very clearly focused on my key priorities. Number one is to drive the growth of the business and to support Priya as she lands in the business as a new CEO.
Ritesh and Rohit, both of you, congratulations. I think, we were discussing earlier also that HUL is the only counter that's keeping the Nifty in check today, and that's reflected in the results as well. Just want to get a sense on the volume growth, because this quarter there's been volume recovery and it's a good quarter per se. You're saying that, the price growth going forward is going to be in, that single digits. So do you think that volume growth from now will be better than what you've done this quarter, because there are clear signs of rural picking up? There are FMCG companies that have gone ahead and said that there are urban green shoots that also are being seen. So volume growth, can we expect that to be in high single digits going forward?
See, overall, as I mentioned, that over last almost 12 months' time, it's a stable atmosphere where we've seen improvement over the last few years, and especially last 12 months' time, and that consumption climates remain stable. We are seeing some uptick in last 3 months' time. More, of course, we have to understand that. Rural continues to be encouraging. So all the economical factors which are supporting growth are present. We expect the improvement to be sustained. And overall, if I talk about the growth of Hindustan Unilever, since the outlook for pricing is low single digit, commodities are range bound, so the growth will be volume led. And we are always very clear that when we drive growth, growth has to be competitive, which means growth ahead of the market. We spoke in the current results that the growth has been competitive. We gained turnover basis market share, not only in last 12 months time, but also in last 5 years time. And that's a pretty strong performance, and that remains the focus for us. So expect sustained gradual recovery and we have to ensure that as HUL we keep growing ahead of the market and keep gaining share.
Just so what Pritesh spoke about is the macro, right? And we said that last time also, that we expected macro, all the actions taken by the government, and with inflation being so, at 2% levels, we are investing for that macro, right? And we were investing ahead of the curve. There are also strongly internal factors. We are driving the growth by allocating resources to our future core and market makers portfolio and to future growth channels. So we see us doing quite well in those spaces. So, and that's a large part of our business now. And increasingly every quarter, as that proportion gets bigger, the growth of our total average growth will start to become even more, I would say, easier, because we'll be in the faster growth spaces. So it's not a one quarter thing. So we're very happy with this quarter results, right? But there'll be good quarters, bad quarters, average quarters. We will stay on this path. And it's the strategic consistency, the long-term nature of this game you should expect from HUL, because we are fighting for the big future where every category that we operate in is a low per capitas. All categories are premiumizing. People are improving their quality of life. So we are betting on a prosperous, developed India, not just only for short term. So I'm just appealing all of you to sort of look at the long-term opportunity in this market that remains extremely exciting. Probably the only market of this scale in the world that will continue to be of this attraction for many, many years going forwards.
Just follow up on the leadership change that you were talking about. You've known Priya for quite a while now. Just want to get a sense that is there going to be some change in terms of how strategy will be adopted by her? Because, leadership could be different for different people. Any kind of color there, if there are early signs of picking up there?
So I think, let me just take that question. So look, the strategy is about moving our business to faster growth spaces and faster growth channels, benefits, brands, segments, channels. So, I mean, it's very obvious, fact that you should basically go where growth is. So I don't think that's going to change. The color and shape of the specific nuances, they have to be in line with the changing conditions. So we should never call strategy as it's not a fixed thing. It's evolutionary. But the broad direction of competitive volume-led growth is what we're going for. As you said, price growth will be lower than, say, in the past. We're going for growing in the faster growth channels and benefit segments. We are about increasing the premiumization of our portfolio. That is continuously increasing. In fact, the last 2 years that I've been in this role itself, we have moved our portfolio by almost 5% more towards future core and market makers. And that just shows you the direction of travel. And I'm quite certain that's going to remain Priya's focus. Specifics of all of this will have to be customized to the conditions she will find herself in the quarters and the years to come.
रोहित सर, मेरा सवाल आपसे है. 37 year आपने HUL को दिया.
All right, there you go. Rohit Jawa and the management of HUL speaking to NDTV Profit at the conference, and the stock reacting up about 3.4%. Incidentally, that was probably Rohit Jawa's last press conference as the Chief Executive Officer of HUL, and he was speaking about the times to come and who's going to take charge, what the strategy is going to be. Stay tuned for a lot of analysis on HUL and everything else, but up next is Know Your Company, and we're talking about JBM Auto. This is NDTV Profit.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
हेलो, बोलिए मैडम। डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा।
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है।
मैडम एक बार को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
Markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.